Have you ever noticed these balance curves from people selling trading robots? These accounts look amazing. Every single month they're making profits, and apparently they never make a loss. They're popping up all over the place. 3/4 of the robots that are sold online all kind of look the same, just like this. But if everyone's making so much money, why isn't everyone rich? Surely with amazing balance lines like this, you wouldn't need to work ever again, right? Hi friends, if we haven't met, I'm Lisa, a data scientist turned algorithmic trader, and I spent 2.5 years testing over 50 of these. And today I'm going to reveal the dirty little secret robots sellers don't want you to know, and how I'm going to trade these going forward. While there's no official name for these, I call these grid Martingale expert advisors. And how do they work? Well, let's say you have some price movement that goes up and down and then back up again. If we were to place a buy trade in a grid Martingale strategy, let's say we placed a buy trade right there, the price is going up, so we take profit at about there. Cool, done. That is the end of this particular trade, which went into profits. But what if the price does not go in our favor? Here we've got a different sort of price action. Now price is going down before it goes back up. So again, we're going to place our buy trade, and when price goes down, we place another buy trade. And the distance between the first trade and the second trade, this is what we call the gap. So we place our first buy trade, we place another buy trade, and then as price continues to go down, we keep the gap consistent and we continue placing more and more buy trades. And the lot sizes also change. For example, let's say the first trade we place a lot of 0.01. The second, we would increase it. So we can choose how much we want to increase it by. Let's say we double our trade, so 0.02. And now the third trade will 0.04, and the next one is 0.08. Right now we have a pretty big floating equity loss, and we've got a total of 8, 4, which is 12, 14, 15. So our total open buy trades is 0.15 lots. And our holding losses as price continues to go down can be quite big. But the benefit of trading bigger and bigger lot sizes is that when price goes back up, it doesn't need to go all the way back up in order for us to make a profit. We can choose to exit out at a profit right here if the price doesn't go all the way up. And when we do exit, we exit all our trades here, and we can come out in profit at, let's say, $1 or $2. That is the main benefit of trading this type of strategy. You only need to have a small retracement to come out in profit. So we never actually realize our loss. We keep on opening bigger and bigger lots until we eventually come out in profit. So every single trade or group of trades does come out in profit. But yes, it can go sideways when we see a huge move downwards and we're just continuing to buy more and more and more, and there is no retracement in sight. When people are trying to sell you these type of expert advisors, what they are showing you is usually the balance. And because every single group of trades comes out in profit, all you see is this line perfectly going up every single month. But what they don't show you is the equity. So you need to understand the difference between a balance versus equity. The balance shows you the closed trades, but the equity is really what you want to see. This shows you the open losses for open trades as well. So if we switch over to looking at a balance chart, unfortunately with my FX book and FX Blue, they do not show the equity well. And the equity, which I'm going to show in blue, follows the balance line, but occasionally you'll see these huge dips. These sharp dips, and sometimes they can be pretty big. And what these dips mean is that you have an open loss at this stage. And sometimes these lines that dip down, these can be huge. They can take out the entire account. So if we start at 0, you can see this line right here almost reached 0. We almost lost this entire account. And this pink line here, this is what the sellers of the expert advisors are not showing you. They are just showing you the perfect balance lines without these dips in equity. It's also important to understand there's a huge difference between selling an expert advisor and trading an expert advisor. So let's go with selling. So if I was to sell Grid Martingale expert advisors, I would not have just one account that would trade and eventually show my results. What I'm going to do instead is I'm going to split up my money into lots and lots of little accounts, like 20 to 50 accounts. And in each account, I'm only going to put in like $100 or so. And I'm going to trade a different Grid Martingale strategy on each account. So I'm going to have like, 20 or so. But I'm not going to show you what they are. I'm going to hide them until they get a track record of at least 6 months or a year. And occasionally, some of them is going to blow up. This one might blow up. Let's hide that one. That one might blow up. Let's hide that one. And I'm going to sell the last 5 that I've got. Obviously, one of them is going to blow up while I'm selling it. So when they do, I'm just going to take it and then get rid of it, hide it so no one knows about it anymore. And now I've left with 4. In the meantime, I'm also building up more expert advisors and more Grid Martingale. So I'm going to hide these brand new ones from people until these brand new ones develop a 6 months or 1 year track record. Let's switch over from selling. Now we're looking at how we can realistically trade these Grid Martingale expert advisors. Now, if I was going to trade this in a sustainable and safe way, this is what I would do. Instead of having just the one account, I would have potentially 2 or 3 small accounts. And you can see, usually a Grid Martingale expert advisor has these small profits along the way, but instead of just risking my entire account, blowing it up and hiding it, I'm going to put a stop loss in. So I'm going to risk, let's say, $1,000. So every time you make a loss, that's $1,000. And you can see that in the equity curve here. And then every time you make a profit, you make $5, $10, and those slowly over time that builds up. And then when you see a huge move in the price movement, again, we're taking another $1,000 loss, or 2,000, whatever number you want to choose. And the reason I would have multiple accounts, so I would try different strategies on the same currency pair to balance out the portfolio. The question I want to ask myself, and what I've challenged myself is it possible? Is it really, really possible to trade Grid Martingale strategies safely without blowing up your entire account? So what I'm going to do is I want to DIY my own Grid Martingale strategies. I want to be able to control the currency pairs that I want to trade. I want to be able to control the gap, the multiplier, how big each trade is going to be, and I want to control the logic. So some strategies might enter based on an RSI, some strategies might enter based on the Keltner channels. I want to control the strategy logic myself, and I also want every single strategy that I create to have a stop loss. The reason I'm going down the DIY path is because I want to control the logic, and not all Grid Martingale strategies that you find for free online have a stop loss. And if I wanted to use a commercial or free expert advisor, I didn't want to be sued by anyone just in case this experiment goes horribly wrong. The big question is, why waste my time running this experiment at all when I've already got a whole bunch of strategies that are working really well for me? My main strategy pool contains strategies that have a take profit and a stop loss, so I know tomorrow I'm not going to wake up with a totally blown account. But with this strategy, you can see there's definitely periods of drawdown. I saw a drawdown of about a month before I saw new highs in my equity curve. And building these low-risk strategies does involve a lot of work. With the rise of AI, like my friend ChatGPT here, algorithmic trading is much easier now. You can ask ChatGPT to make MetaTrader code for you and just run it. So there's going to be a lot more competition in the marketplace. Also, Forex is already an efficient market. If you're not familiar what efficient means, it means it is a mature market. And mature markets means there's much more players, and each player will slowly and gradually over time wear out the edges in the market. Unlike, for example, crypto, which is still a fairly new player in the market, so there's a lot more edges in the crypto marketplace compared to Forex. And a lot of the low risk strategies that I have built that also run in my strategy pool, they can be broker sensitive, whereas with Grid Martingale Expert Advisors, they are not so broker sensitive. This is an experiment that I plan on running over the next 2 years. And why 2 years? Because realistically, from the analysis that I've done so far, you can have a losing period that spans about a year. So I need 2 years to really prove that this system that I'm going to build is profitable in the long run. There are 3 main things that I need for this. The first thing I need is a template. And what a template does is it gives you the structure. And the structure will be of a Grid Martingale Expert Advisor. So when a trade goes into profit, we take profit. When a trade goes into a loss, we're going to open more and more trades at a specific grid level, at a specific multiplier. But the entry logic, I will let the software decide that for me, whether it's RSI or Keltner channels, whatever logic it picks and it thinks is best, I'm going to go with. The next thing I need is a workflow and a system that I'm going to use to generate these expert advisors. I still want to incorporate the best practices of algorithmic trading in my workflow, for example, in sample, out of sample, Monte Carlo, all that goodness. So the software that I'm going to use for this process is called Strategy Quant, and it doesn't really work that well for multiple magic number systems, and the template that I created requires multiple magic numbers. So I do need to hack the code and modify it just a little bit to make it work with multiple magic numbers. By the way, if you're already a profitable trader and are looking at making some extra money, then you might want to check out trading.com. They provide a system for profitable traders to become hedge fund traders. From as little as $1,000, you can trade a real $10,000 account and start the process to qualify yourself and proving yourself worthy of managing hedge fund capital. Unlike prop firms who want you to fail, trading.com is different. They want you to succeed. That's why they don't put in a million rules. There's just 2 rules. The max drawdown is 10% and the profit target is 20%. When you reach the profit target, you qualify for the next stage, pass all 5 stages, and that's where you could get access to hedge fund capital. So from $1,000, your total payouts just for the qualification process, if you add up all these numbers, could be $40,000. And then when you're trading hedge fund capital, who knows? Thanks trading.com for sponsoring this video, and the link will be at the bottom. This is the system I've already gone and built. I'm using a software called Strategy Quant to create the Grid Martingale Expert Advisors for me. Let's open the first one at random and check out the equity curve. Notice that it's not perfectly smooth. That's because I've put account protection in place. So this particular strategy, I think, has $2,000 in protection. So it goes up, and every once in a while you'll hit these account protections. And overall, the strategy is profit. You can see the profit here and the drawdown. My eyes are not good enough to see what number that is. And I can also look at the entry criteria if I want. And if we look on the left-hand side with just the list of different symbols there are, why is this not opening up? You see down in this column, it's got the list of symbols. So you can see the idea does seem to work across multiple symbols. Some strategies obviously are going to make more money than others. Some you might see periods of losing, and where we're seeing a lot of stop losses being hit, like over in this period for this particular strategy. So I'm going to use the knowledge I know of the best practices in algorithmic trading to pick the best out of these and the ones that are most likely to work going forward. But it is good to see that my idea of Grid Martingale Expert Advisors can potentially work over the next 2 years, even though I've put in a protection in places where sometimes they are hit. Sometimes you'll go years and years without hitting any protections at all. I've been running a couple of these strategies over the past month, and you can see it does seem to be operating the way I intended. So far in this account, it has not hit the 1K stop loss that I put in place. And over the past month, it has made just over $500. I was pretty happy with the results over the past month of demo testing, so I've gone and added 3 more strategies. Again, grid martingale with 1K protection. And if we take a look at the trades on the chart, they do look like what I expect for a typical grid martingale expert advisor. You can see here, it's taken a whole bunch of buy trades, and here we needed 4 trades to come out of profit. For this situation here, we've got 2 trade scenario. For this one, we've just got the 1 trade which went straight into profits. And then lastly, a 2 trade scenario where they came out in profit. So template created, check. Workflow created, check. Modified and tested the code, check. Now just to wait for 2 years. I've shared the template, the workflow, and the code with the members of my Algo Lab, and there will be a link below if you want to join as well. In 2 years, we will have the answer to the question, is it possible to trade grid martingale strategies safely? In the meantime, if you want to see the video where I created this template right here, then I do recommend you watch this video right here. Thanks for watching. Bye.